Good evening, friends. You can see time is around 11:12. As I have started on weekly trade analysis from Monday to Friday, the week one trade analysis, which I already explained from 3rd of August to 7th of August. And now let me explain this week trade analysis from 10th of August to 14th of August. The zones which I have marked are the pivot levels, guys. I think you are not sure about what pivot levels are. You can see this is the pivot level. This is the pivot levels of this day. This is the pivot levels of this day. And this is the pivot levels of 13th of August. And this is the pivot levels of 14th of August. Whenever there is a narrow pivot range, guys, there is a high tendency that the market would be a trend day. And whenever the pivot range is wide or when the width is too much, you can expect a sideways day. And you can see here, compared to all these days, only on this day, the pivot level width was too much compared to the previous day, and you can see totally there was consolidation. And along with Thursday, you can see there is an expiry day on Thursday, so you can expect premium decay and option sellers making money out of it. So you should always keep pivot levels as one big confluence, guys. Coming to Monday's trade, what you can see here is that if you look into a daily time frame analysis, guys, in daily time frame analysis, what you can see is that the market consolidated here the first 4 days from 3rd of August to from 7th of August, the market consolidated, and from 10th to 16th, you can see the market sweeping up this high. You can see the market swept this high and closed within this range. So you can expect bearish momentum here. But let's look into a 1 minute time frame analysis, guys, and see how exactly market played here. So as per my trading knowledge, how I usually trade is that you can see yesterday the market showed some kind of selling pressure on 7th of August, but you can see with this huge momentum, guys, all those sellers who might have entered short position randomly here with this impulsive momentum, the market might have taken out all those sellers who might have entered here, and immediately the market continued further selling towards the downside. So those people, after seeing this impulsive momentum towards the upside, might have taken long positions over here. But you can see further the market even broke this low, showing a negative bias in the market. But what happened on Monday is that the market gapped up, guys, and market gapped up above the pivot levels, and you can see a solid, huge bullish candle formed. So what I would always do is to plot the mid of the first candle. So this is the first candle. So let's mark it over here. If you mark the mid of the first candle, guys, so this is the 0.5 level. What you can see is that as the market gapped up, showed a huge bullish candle over here. This is not a huge gap up, guys, but it is flat opening only. But definitely after the market opened, it showed a huge bullish candle, which even where the market even swept the previous high over here. You can see this is a buy side liquidity over here where the market tried to liquidate this high over here. But immediately what happened is that you can see the market showed some sort of consolidation over here. You can see this sort of consolidation over here. So what usually in case if the market sentiment would have been biased in bullish is that after gap up, the market might consolidate like this and continue further bullish like this. This is what usually happens, guys, in case if the market sentiment is bullish. But what happened here is that the market consolidated over here and showed a huge showed some kind of bullish candle. But what happened is that the market with this single bearish candle, guys, broke towards the downside. You can see This is the support over here where the market formed a green candle over here. But this candle over here, guys, this is one candle which entirely changed the bias from bullish to bearish. This one candle, and if you come to moving averages also, guys, with this candle you can see this single candle breaking the 9 as well as the 21 moving average towards the downside and closing below the 21 moving average in a 1 minute time frame. So this is one confluence with moving average also helps to add up. But what usually happens is that when the market retraces back, uh, and once if the market would have closed above this level, so in case a solid green candle would have appeared like this, a green candle would have appeared like this, guys. So in case if a solid green candle would have appeared like this, what would have happened is and closed above this previous side, then definitely my bias would have been long position, keeping my stop loss just below this candle and targeting it towards the upside. So this is what usually I would have taken a trade in case my the market would have closed above this level. But instead, what happened is that after retracing back towards the discount zone. So if you consider this. If you consider this solid bullish candle over here, the market reached back to this zero point 0.5 level, below this zero point 0.5 level, the discount zone over here. And definitely the market could have taken some sort of support and continued for the bullish, but instead this candle guys broke towards the downside. So this was where we could have easily entered short position, keeping your stop loss just above this body of this candle, guys. So this is how you could have entered. And you can see, and for target levels, definitely you could have used this candle over here, right? So if you consider this a bullish candle over here and do projection levels over here, what you can see is that the market has reached all the way to this level. So what you can see is that this is the manipulation like this. So this is what it's more important. So if you consider this momentum to this momentum, this is one short entry where you could have taken, targeting it towards the sell side liquidity. So for target levels, this is one liquidity level where you could have targeted. So this is one sell side liquidity. And along with that, you could have targeted this liquidity or the fair value gap over here. You can see there was this fair value gap where price has not yet been traded over here. So this was one good momentum, guys, where you could have easily taken trade over here. So for retracement levels, in case if you consider this high to this high, you could have targeted somewhere along this level, guys. This is how you could have easily targeted towards the downside. A good risk to reward ratio, guys. Seeing this momentum towards the downside, and you could have used moving averages also confluence as the prices was continuously trading below the 9 moving average, clearly signifying bearish momentum. So this was one good opportunity we could have taken. We should always wait for the close of the candle, guys. So you can see what happened here is that a solid bullish candle has appeared over here, which is engulfing the previous bearish candle. So you could have easily tried your stop loss all the way till here and targeted. This is how you could have kept your stop loss. Just after seeing this bullish candle, you could have exited your position. So this was one good opportunity where you could have easily taken a short trade over here. And after this huge bearish momentum, you can see the market more or less consolidated towards this sideways. And for long entry, what will happen here is that the market swept this previous low, guys. And what happened is that the market closed above this level. You can see clearly the market closed above this level. So, and what happened is that the market retraced back to the order block level over here. You can see this is the order block level. So this was one perfect entry where you could have taken, targeting it towards the upside. So the Fib retracement level. So if you write the common point between that to the common point between this, so the 1.68 level, this is the trade where you could have taken it towards the long side, guys. After seeing this huge bullish candle, this is where you could have keeping your stop loss just below that target and targeting it all the way to this candle. This was one of the best opportunity, guys. What happened is that you can see immediately where the market swept this previous low over here. It showed a huge aggressive bullish momentum with fair value gaps over here, and the market retraced back towards this order block level over here, took support from here and continued further bullish. So that is one trade opportunity where you could have taken towards the upside. This is one trade opportunity, guys, and you can see after that the market more or less consolidated in a sideways manner. You can see here what happened is that the market again swept this previous highs over here. You can see the previous three highs over here and broke aggressively towards the downside with a fair value gap over here. You can see this is the fair value gap over here. So, and you can see the market sweeping that high, and what you can plot is the breaker block along with fair value gap over here. This is the breaker block over here. So what you could have easily used is that the common point between this to the common point between this to the common point between this. You can see how market exactly came to 1.6 level over here, and the mid of 1.6 as well as 2.6 levels. You can see this is one trade opportunity where you could have easily taken over here, keeping a stop loss just above that candle and targeting it all the way to this levels over here. So this is another trade opportunity, guys. You can see where you could have easily taken short position, break a block along with fair value gap, where the market swept this previous highs over here. You can see the market sweeping this previous swing highs over here and breaking it towards the downside. So this was one trade opportunity, short momentum, up momentum. You can see sweeping liquidity towards the downside and breaking and closing above these candles, retracing back to these discount levels and continue further to 1.68 level. And you can see this is one short trade opportunity where you could have easily taken this. And after this, what happened is that after this kind of huge bullish momentum, guys, the market consolidated in the throughout the day. And what happened the next day is that the market showed a huge gap down here. You can see a huge gap down over here, and this is the 0.5 levels. The market is trading below these levels, and you can see this sort of consolidation over here. So in case if the market would have shown some sort of manipulation, okay, so what I'm telling you is that, so as Tuesday is an expiry day, what usually market would have happened is that after this kind of huge selling pressure, what would usually happen is that the market would retrace aggressively towards the upside. This is what usually happens, guys, in case to target to target all those random sellers who might have entered here. But instead, what happened is that since the selling pressure was so strong, the market closed below this series of upward candles over here. You can see with this kind of huge bearish momentum, where the candle over here is showing a huge engulfing candle over here. You can see this kind of candle over here, guys, which is a huge engulfing candle. Along with it, it's breaking the low of this candle, guys. And you can see this candle showed some sort of rejection, but immediately the following candle broke this towards the downside and closed below this series of upward candles. And you can see this kind of consolidation also. It's a clear bearishness over here, this sort of consolidation. So what you could have done is that once the price closed below this candle, this is exactly this candle which closed, and you could have easily taken trade over here, keeping your stop loss just above that candle over here. And for target levels, you could have used the retracement levels of this, the common point between this to the common point between this. And you can see easily you could have targeted towards the downside. So for target levels, what you could have done is that, so in case this is the retracement level, guys, so we can use the projection levels here. So if you consider the projection levels towards the downside, so let me show you projection levels over here. So the common point between this to the common point between this, and click on projection levels. So exactly, you can see, guys, this is where exactly the market came over here. So this is the projection level where the price took support. This is where you could have easily entered your short position and targeting it all the way to projection levels. See, this was one good opportunity where you could have taken trade. You can see after this kind of huge bearish candles forming over here, what happened is that immediately a solid bullish candle formed over here, engulfing the previous candles over here. Before this solid bullish candle, what I have to teach and tell you is that you can see, guys, what happened is that this candle over here, this what happened is that it swept the previous low over here. You can see sweeping off the previous low and showed a huge bullish candle over here. And what happened is that after this kind of solid bullish candle, what happened is that the market retraced back to these discount levels. You can see this is the fair value gap over here, and the market retraced back to fair value gap over here and continued further towards the upside. But what we need to see is that the market formed a equal low liquidity, guys. This is an equal low liquidity over here. So in case if the market sentiment was hugely bullish, the market would have continued further bullish towards the upside. But what happened is that since there was a strong selling pressure previously, so what you can a strong selling pressure over here, so you can't expect in case if the market sentiment would have been bullish nowadays, the market would have taken support here, continued further upward momentum. But what happened is that this kind of V-shaped recovery didn't happen it over here, but instead the market showed this aggressive momentum towards the downside. So what happened is that the market showing some sort of consolidation, but during this consolidation, what is happening is that a lot of sellers might have entered here. But what happened is that the market mitigated this order block level. If you consider this manipulation leg over here, you can see exactly where the market came, mitigated this order block and continued further bullish towards the upside. So in case if you want to plot this target levels, the common point between this to the common point between this to the common point between this, you can see, guys, clearly what happened. The 1.68 level target levels, which I have shown you, the long position over here. So the entries where you could have taken is that, see, one entry where you could have easily taken is that, guys. So you can see this was one after the price closing above this candle. You can see aggressively once the candle closed over here. So this is where exactly you could have taken long position, keeping ideally your stop loss below this and targeting it towards the upside. So this is the 1.68 level. But you can see what happened instead is that after this kind of huge bearish momentum, what you have to keep in mind is that there is this fair value gap over here. Fair value gap over here as well, where the market mitigated and failed to close above these levels. In case if the market would have closed above this fair value gap and showed a huge solid bullish candle, then you could have considered it, the market, to consider it bullish towards the upside. But what happened is that the market reached, mitigated this order block level and showed some sort of bearishness. So you could have waited for some sort of retracement, guys. So definitely once the market reached some premium discount zones over here after seeing this kind of huge bullish candle. So this was one trade opportunity, or exactly this candle also is where you could have easily entered, seeing this kind of huge solid bullish candle, targeting it all the way to 1.68 level. So this is quite a bit complicated, but it's very easy to understand, guys. What happened is that after a huge selling pressure, on an expiry date, the market showed some sort of consolidation, swept the previous low and broke structure towards the upside. You can see clearly the market broke structure towards the upside, and after sweeping, the market mitigated this order block level. This is the order block level where the market mitigated and price fairly closed above this level. So this is exactly where you could have taken long position. But before sort of manipulation happening, guys. Price closing above this candle over here for you to take long position. What happened is that if you look at the previous price action, what's happening over here is that there is fair value gap over here, which has not been mitigated. So the market retraced back, mitigated this fair value gap, and price failed to close above this fair value gap and showed a huge rejection candle, following by a huge bearish candle over here. So this is when you could have exited in case if you might have taken a wrong trade over here. But definitely, since there was this sweep of the previous low and breaking structure towards the upside, so there is some strong support over here. So once the market reached the discount levels, definitely after seeing some candle confirmation, you could have easily taken a long position over here, long trades over here, and you can see how the market showed a upward rally over here throughout the day. So since it is expiry, it's better you could have easily exited over here. But what happened here also is that the market, see, after this sort of consolidation, the market swept this previous lows over here. This is another huge sweep of liquidity and broke structure towards the upside, and so aggressively that the market even closed above this levels over here. You can see this is where the market closed above these levels. And in case if you have to plot the Fib retracement levels, the common point between this to the common point between this to the common point between this, you can see the market reached all the way to 100% level. But what happened here is that, see, after this kind of huge aggressive momentum, the market again came and liquidated this low over here. So once the market showed this sort of liquidation, guys, the equal low liquidity over here, you can see equal low liquidity along with equal low liquidity, you can expect the market to come and mitigate these demands over here. This is one manipulation, guys, but definitely what I'm asking you is to usually focus on morning trade, guys. So morning trade is one of the best opportunities where you can trade trades over here. You can see this was one good trade. This was another good trade where you could have taken. And coming to Wednesday, guys, what happened on Wednesday is that you can see the market showed a flat opening, rejected price from these pivot levels over here, and showed a huge bearish candle over here. But immediately after this huge bearish candle, guys, you can see the market showed a very huge aggressive momentum towards the upside, and even closing below the opening price of this level, you can see the market showed a huge bullish candle and closed above the opening price even of this huge downward displacement candles, showing a huge aggressive upward momentum. And this was where you could have easily taken short position, keeping your stop loss just below that candle. Or in case, guys, what you can see here is that if you look into moving averages over here, and you can see this one candle over here breaking the 921, the 200 moving average towards the upside. So in case if the market sentiment was bearish now, guys, the market would have showed like a momentum like this, rejecting price from these levels and closing below this. Once the price closed below this downward upward candle over here, and price showing some kind of bearish momentum with some kind of price action, where the candle closing below this upward candle, that's when you could have easily taken short position towards the downside. But instead, what happened is that instead of breaking it towards the downside, a single solid bullish candle broke towards the upside and closing above the previous candle's previous bearish momentum or opening price levels. And if you try to plot the mid of the first candle, so if you consider the downward candle over here, this 0.5 levels. So if you try to plot the mid of this first candle, this is the mid of the first candle, guys, and the price broke towards the upside, and you could have easily kept your stop loss just below that candle and targeting it out all the way towards the upside. And for target levels, what you can see is that you could have used this projection levels over here, the common point within this to the common point within this. So the common point within this to the common point within this. So what happened is that the price reached all the way to this projection levels over here. This is the projection levels, guys, where the price reached all the way towards the upside. So you can see clearly where the market again liquidated towards the upside. And what happened here is that you can see once the price reached certain kind of momentum towards the upside, it's kind of huge displacement. You can see a solid bullish candles. A lot of buyers might have entered here, but immediately followed by bearish momentum towards the downside and price closing below this candle over here. You can see the price action broke. There was some breaking structure, and you can see again another further breaking structure. So, and the series of upward candles over here, this is the mitigation block, guys. This is the mitigation block. So this was another sell opportunity where you could have kept here, keeping your stop loss just below and targeting it towards the downside. And for target levels, in case if you consider the common point within this to the common point within this to the common point within this, you could have targeted the 100% move, or you can see the market reached midway between the 100% as well as the 1.68 level. So you could have just tried your stop losses till along with these levels, or you could have kept it here, or you could have kept it here, guys. So this is one trade opportunity where you could have taken a short position, or you could have taken another short position here itself, guys, once the price closed below this candle over here. So this was another trade opportunity where you could have taken, keeping your stop loss just above that candle and targeting it towards the downside. And for target levels, the common point within this to the common point within this to the common point within this. So let me see, guys, the common point within this. So you could have targeted it all the way to the 1.68 level. The price almost reached that levels, guys. So this is one trade opportunity where you could have taken, and trialing your stop losses to the swing highs is where you could have just placed your orders. But definitely you can see during the second half of the day where the market showed a huge bullish aggressive momentum towards the upside. Since there was initially a huge bullish upside momentum where the market swept this previous high over here. This is sweep of liquidity and breaking it towards this downside. And again, the market continuing further bearish momentum, guys. But this is quite unexpected, guys. You can see how the market showed a huge there might not be a lot of buyers who might have entered this market over here. This is just a huge aggressive momentum towards the upside. But you could have just captured this momentum trade, guys, this long opportunity once the market broke structure towards the upside, keeping your stop loss just below that candle and targeting it all the way to the projection level. So this was one trade opportunity where you could have taken on Wednesday. And coming to Thursday, guys, coming to Thursday, what happened is that let's take this mid of the first candles out over here. See, especially what I would like to tell you before me explaining about Thursday, guys, whenever there is uh, expiry days with wider pivot range, definitely don't try to take this trade on date. Definitely don't try to trade on those days, guys. So, or you can just do selling over here on that days. So you can see throughout the day the market consolidated in a sideways manner, and there was no significance in anything, either buying or selling over here. But what happened here is that I would like to tell you one thing is that on Wednesday, guys, if you try to plot the mid of the first candle, this was a huge bearish candle over here. So let's try to plot the mid of the first candle as well as 5 minute zone also. So that's the 5 minute zone as well. So what happened is that after this kind of huge bullish momentum, market manipulated this previous high, closed below, but again the market broke this manipulation leg over here, showing some sort of bullish bias over here. But what happened is that since a lot of buying pressure was here, the market again reached back to this discount level and showed some kind of bearish momentum over here. So what you can see here is that after a huge bearish candle, the market showed a green candle over here. So in case if the market sentiment would have been bearish, bullish nowadays, what happened is that the market would have continued further bullish like this, closing above this previous bearish candle over here. But instead, what happened? The market closed below this level over here. So this is exactly where you could have taken short position once the market closed below this series of upward candle. So short position over here and targeting towards the downside. And for target levels, you gotta use this projection levels over here. The single candle projection levels over here. The common point is swing low to swing high. And you can see exactly where the price came and mitigated this projection levels over here. So you can see, guys, the price came and mitigated this projection levels over here. So this was one trade opportunity where you could have taken, and this downward momentum where you can see there is some sort of fair value gap over here where the price mitigated this and continued further bearish. But in case if the market sentiment would have been further bearish nowadays after this kind of displacement towards the upside, price mitigated this fair value gap and continued further towards the downside. This is how the market would have formed in case if the market sentiment would have been bearish. But what happened instead is that you can see this support over here was broken towards the downside. Again, price retraced back, rejected price from this fair value gaps and has to continue further towards the downside. But what happened is that there was very strong confluence here that the market sentiment would be bearish. But what happened instead, the market neither showed some sort of displacement over here, nor there was aggressive selling towards the downside like this, a huge displacement in price towards the downside. But instead, what happened is that the price closed above this series of downward candles. So what happened is that I have taken short position over here, guys, and I have tried my, I continued, I have taken short position and continued it further towards the downside. And again, the price retraced back to the point where I initially took my short position, but showed some sort of bearishness over here. But what happened is that I tried my stop losses to here, expecting that the market might continue further towards the downside. But instead, what happened is that with this huge bullish candle, the market closed above this bearish momentum and continued further towards the upside. And what happened is that once the price retraced back and with this huge solid candle over here, the market showed some kind of huge bullishness over here. So what I expected is that I've taken long position, guys, keeping my stop loss just below this candle, because once my stop loss got hit, my bias changed from bullish to bearish, from bearish to bullish, and continued further bullish towards the upside. But this was a wrong trade, guys. Either I made a little bit of profit over here, but this is not usually how you have to trade. Suddenly changing your bias from bullish to bearish. But what happens, see, you can see after this kind of huge solid candle, you could have tried your stop losses, but what happened is that instead the market consolidated and clearly broke toward below this low. It's just because it was an expiry day, guys. In case if it was some other day with where the market by sentiment where there would be a narrow pivot range over here along with a huge bullish sentiment. Further, that you could have expected a huge upward candles like this towards the upside, seeing this kind of huge bullish candles, guys. But what happened is that the price consolidated between these ranges throughout the day, and there is no point in trading this kind of days, guys, when there is a huge pivot range over here. And what happened on Thursday? Thursday was Friday was one such crazy day, guys, where I had to accept two of my stop losses, and I'll definitely tell you what happened. Um, you can see after this kind of consolidation, the market showed a huge bearish candle. And what I usually trade is that you can see this one huge bearish candle over here. And if I try to plot the fib of this candle, so this is the zero point 0.5 level. If I try to plot the mid of the first candle, you can see this is the zero point 0.5 level over here. And the price is trading below the pivot levels. What happened here is that the huge bearish candle, and since it was an expiry day, once the price rejected over this low and continued further bullish, but instead the price was not able to hold, and price closed below this body of this bullish candle over here. So what happened is that this is where I have taken short position, guys, keeping my stop loss just below above that candle. And target levels, I targeted it towards the downside. And for target levels, this is the manipulation leg which I have used. So the common point between this to the common point between this. So if you try to plot the projection levels over here, so this was exactly where I expected the market to continue further towards the downside. But what happened here is that the market swept this previous lows, guys, over here, invited sellers to enter the market, and this is one sweep of liquidity and immediately showed a huge bullish candle, guys. Before this, what happened is that I have already tried my stop losses to this level, expecting the market to continue further towards the downside. But what happened is that you can see this kind of price rejecting and closing within this body range over here. This one candle had some kind of confluence for me that the market might reverse, but I just hold it on to my trade, since what I had in my mind was that, okay, in case if the market even retraces to this level also, since the price even closed below this level, you can see as since at this point my bias was bullish only, so this you can consider as a break of structure over here. And another thing is that there is this fair value gap over here. You can see, guys, this is a very good fair value gap over here. So in case what I expected is that the market showed this sort of rejection of price from this level. So here you can see rejection and continued further towards the downside. So this was another trade opportunity once if the price would have closed below this up body of this upward candle towards the downside and continuation of price towards the projection levels over here. But instead the market with this solid huge bullish candle, guys, aggressively broke towards the upside, uh, hitting all those positions who might have taken short position over here, shorts over here. And you can see these three candle curve structures over here. clearly signifying some sort of bearishness. So to target all those sellers, random sellers who might have entered the market, the showed some kind of bullish momentum. And again, the market rejected price from this fair value gap and continued further bullish. So immediately what I have done is that after seeing kind of huge bullish candle towards the upside, so I immediately price retracing back what I had did. I took a long position here, keeping my stop loss just below this candle. And for target levels, you could have easily plotted the web extinction levels, the common point between this to the common point between this to the common point between this. You can see the market reached all the way to 1.68 level over here. This is the 1.68 level where the price reached over here. The 1.68 level where the market reached over here. But what happened is that after this kind of huge upward displacement, what happened is the market closed below this candle over here. So seeing this kind of V-shaped recovery, what you could have expected is the market to retrace back and continue further. But in case for aggressive sellers, you could have easily entered short position. And what you can see is that this is the manipulation legs. So you could have considered the manipulation legs of this to the manipulation leg of this. So you could have considered trading it all the way to this levels, guys. You can see the market reach. So in case if you could have seen here, instead of taking the wicks, guys, you could consider the count point between this to the count point between that and count point between this. So just a little bit of arrangement, misarrangement. You can see the market reached all the way to this level. So this was one trade opportunity where you could have taken it towards the dot side. So leave alone this trade, guys. You don't have to take this trade, but definitely you could have. There was some sort of manipulation over here, but immediately after this huge solid candle, you could have taken it and targeting the 1.68 level or the pivot levels, expecting the market might continue further, but instead the market showed again very sentiment towards the downside. And what's my bias for the next week, guys? So what's my bias is that if you see here and consider the moving averages over here, you can see clearly the market rejected price from this fair value gap and showing some sort of bullish momentum. So once in case if the price breaks above this level, now guys, this is where I would have considered it to be very bullish. And in case if the price breaks below this level, this is where I consider it to be very bearish, guys. So in case if the market is consolidating between 57,175 and 58,000, this 2,000 point difference in price. So in case if the price is consolidating between this, you can expect more or less bearish or bullish momentum as per the price action of daily chart analysis. So if you consider daily chart analysis over here, you can see the market is clearly bullish over here. As you can see here, this candle over here broke it towards the downside. So you can expect the market to continue further bearish, guys. You can see the market here breaking the 9 as well as 21 moving average towards the downside and closed below. So what I can see is that definitely this sell side liquidity over here. So this might be swept over here. So this is one trade opportunity. This is sell side liquidity. So you can expect bearish momentum towards downside on Monday, guys. So on 17th of August, definitely look for short setups. In case if the market gap downs, definitely go for short trades, guys. So that's what my trade analysis for Monday is. So this is week 2 of August, guys, where I explained you the trade analysis, especially majorly focusing more on morning momentum trades. I hope you follow my channel, guys, and definitely in case if it would have helped you, please share your review over here. It's very much needed for me to make further progresses regarding my trading journey, guys. Thank you.